as simple as that. And aggressive one. So coming back to this point, like this mix is always debatable, right? Like I'm saying mutual fund 50% and stock 15%. You can up stock a little bit, but I want to keep the portfolio as simple as possible. This way, you don't want to think. You just want to just save money and invest on regular basis. That way you can maximize your return, right? So let's say you're an aggressive investor, you are in this top portion of this risk profile, and you have a longer time horizon. Um, I This is my portfolio. This is how my portfolio would look like. Somebody can question, hey, why you want to put some person in bonds? This is just to offset my portfolio because I don't want to completely aggressive, right? Like completely aggressive means like, see, when I'm putting some money in bonds here, this also provides me a liquidity option. Because let's say I'm putting everything in stocks, there's no way I can take it, right away, right? Somebody can say, hey, you have cash too, but you know, 15% will give you that cushion, right? So if you find an opportunity, you may liquefy some of these bond and cash, and then put that towards stocks, you know. So that is the cushion I'm giving to this portfolio. This doesn't mean that I'm kind of little conservative. I just want to have that cushion in my portfolio. That's why I'm creating these two, bonds and cash, which is bonds is 10%, real estate is 15%, cash is 5, crypto is 5, and stocks is 15, and mutual fund is 50, right? So that's the mix I would invest. And my picks for bonds and mutual fund in this scenario would be, again, I will go with I bonds. Uh, and for us, as far as mutual funds, I will go with VTI or SCHD. Explained already why. And when it comes to stock, I would follow value investing principle. I like that for method, philosophy in general. So you don't want to pick a stock which is on euphoria. So you want to pick an asset which is undervalued, but the fundamentals of that company is good, and they have a um, good future going forward. These are the key things that I would see. Again, this would be little bit too much for a beginner, but if that is the case, then I would say like this 15% you can pull it off, and then basically combine with mutual fund, and then up up the mutual fund exposure to 65, right? If that is too much for you, right? If you Because since you're a beginner, you may not be knowing how to pick the stocks. So if that is the case, then just combine that with mutual fund, you should be fine, and stick to VTI or SCHD. But let's say like you are a beginner, but you have some understanding of stocks, you've heard it. Now, this is where I would suggest you to follow value investing philosophy. You don't want to go and invest like, whomsoever says, like your mom and pop says, like, or like your neighbor says, or like your friend says, your colleague says, right? You want to invest in companies that has value and good future, and the fundamental of the company is strong, their balance sheets are good. So you need to do some sort of research before you go and invest in that. But if that is not your cup of tea, combine it with mutual fund, you should be fine. In terms of real estate, I've suggested REITs. So you can go and invest in some real estate investment trust, which are part of the UT family, and then you should be fine. You don't need to go and buy the actual real estate. You can do this way. This way, you know it is understandable for beginners. You may not have larger capital to go and buy a real estate. So therefore, like it is suggested, you can buy some REITs, right? So for example, let's see. Uh, so for example, ZRE. See, I'm from Canada, so I'm just speaking. So this is a REITs ETF, which basically tracks lot equal weight. Basically, they have, like, let's say 13 or 14 companies, and they provide equal weights to all of them, and they basically track their performance over the time. Some of them would be in residential real estate, some would be in commercial, so that you get that mix. You don't need to go and buy the actual real estate property. This would do. So for real estate, I would suggest REITs, and this way, this is what I would suggest for US aggressive portfolio. And finally, for Canadian aggressive, I would suggest like 30% on stock, 5% on crypto, 10% on real estate, 5% on cash, and 50% on index fund. Again, this 30% stocks can be combined with index fund. If you're really, really beginner, you don't know, have any background on stocks, and you want to make your life easier, then just put all that 30%, combine it with index fund. So basically, it's going to become 80% in index fund. That's fine too. But if you have some, if you want to expose yourself to stocks, again, you know, my suggestion would be value investing. So you can read about it, research the company fundamentals, balance sheet, and if you think the company is sound enough, then you can go on about investing. And then real estate, again, the same idea. Invest in REITs such as ZRE. You should be fine. And 5% cash is just to give you that cushion, right? Like, you know, uh, when the market is down or something, you just want to deploy that money. So just having that cash gives that cushion. So I in both these portfolio, I did provide I some exposure to crypto. Um, it's up to you. You can replace this crypto by options. That's fine too, if you know what. But I'm thinking you're a beginner investor. You don't know, um, because options are a little complicated enough. So you may not be knowing that. So crypto, whereas crypto, you just go and open an account in like uh, crypto.com, right? Yeah. So this is one of the exchange. You just buy, open an account, put the money, and then you can start buying your crypto. I'm no way affiliated to this company. It just came to my mind. I just throwed it for an example. So there are many crypto companies out there, so you can, anything would do. It's simple when compared to options where you need to know what what exactly you're doing. So it's not more suitable for beginners. So that's pretty much. So just to summarize, investment how to create an investment portfolio for beginners. Basically, you need to, there are three core principles for asset allocation. You want to diversify as much as possible. You want to invest in uncorrelated results. You want to maximize your return based on your risk tolerance. So, and you want to avoid the country biases, except if you're in US, it's fine. You can buy your own your own country indices. That's fine. But if you are elsewhere, you need to see if you can get an opportunity to buy other ETFs from other exchanges around the world. That way you get diversified. So when comes to in building your investment portfolio, the risk and investment goals are very key. Basically, you need to have a good understanding of time horizon and what are the risk associated with each, and then based on that you build your portfolio. And I showed you some examples of conservative, moderate, and aggressive portfolio. So if you like this video, please hit that like button and subscribe to my channel. Thanks a lot for watching. And if you have some questions on what I had, please comment on my channel, and your subscription will take this video to many of the people around the world who would be benefiting from this resource. Thanks a lot for watching the video. Have happy investing.